Hello, traders. I want to talk to you about today's price action. It was a little wild and woolly early on, and then it kind of smoothed out a little bit. So, the first 1 minute candle is right here. When we stay in it for so long, I don't really think of it as a good place to be an entry signal. I mean, you could say over here at 11 o'clock that was it, but I wouldn't think so. Today, we're going to talk about the ATM model. Okay. So the New York session actually begins at 6 a.m. Texas time, or if you're a New Yorker, 7 a.m. Since we're dealing with the New York Stock Exchange, it'll usually say 7 a.m. Eastern time. So that's when New York actually does begin, even though the open market doesn't start until 8:30 or 9:30 New York time, 9:30 NY, 8:30 CST. So I always mark out the pre-market high and the pre-market low. If we go to a 30-minute and we go to extended, that's where I have these marked. So this is I have it off on here. This is the 8:30 candle right there. So that's our pre-market high. And this is the 8 a.m. candle right here, pre-market low. We took that out. So you just mark those, you leave them on the chart. How do you use those levels? Once they're on there, you go back to your, I don't know, you can go back to your 1 minute, 5 minute, whatever you want to use. But essentially, when we open, you're looking for one of these to get taken, and then it go to the other. And it can go up first and down here, or it can go down here and up first and up there. Either way, you're looking for one of those to get taken and then run towards the other one. So now we're back to just regular trading hours only. And you can see the market did push up almost to settlement. Didn't quite make it. That gives you an indication that we might. And then we push down here. We already opened below these 4 hour lows. I had two of them marked here, and they're no longer valid. I'll show you those real quick. So this one's the one we created yesterday, and this one's the one we created a while back on February 6th. And this gap right here was a draw yesterday. We filled it and then took off back up. Today, I thought this one might be the draw, but as you can see, I've seen this a lot, so pay attention to this. This wick right here is shorter than that wick. That means the liquidity at this candle was already taken by this one on February 5th. So the market doesn't need to trade back down here. The liquidity there has already been taken. And I think that's why we stopped where we did instead of taking this low. But it did still mess with my head a little bit. I was thinking, well, why don't we go take that low? But we didn't need it. So I'm going to delete it. So we did take these two 4 hour lows there. That's good. We don't really need those on there anymore. Just to clean up the chart, I'm going to get rid of them. So now the pre-market low is our focus. And then yesterday afternoon, if you remember, I was thinking that this pre-market high, this 15-minute high was our target for downside when we were in this range here. And I put my order to go short right there above that 15-minute high. And then we only took this one out by a tick, and then we went south. And so I missed that trade yesterday. Once we started on the road, I didn't really see a good place to get in. I can't remember if I even got in or not. But I missed the bulk of that move. I know that. And so now we're into today. We take the pre-market low, and then we start running up. And we go and we take that. That 15-minute high got taken today. And these, very beautiful, very nice. And that was my exact hypo. We take pre-market low, possibly that other 4 hour low, and we run up and take out the high of that range we created yesterday. 100% my hypo, and should have made a lot of money. That 4 hour low made me apprehensive, and I did not get in on this trade. I did try to get in somewhere in this area. Let's go to a 1 minute. Let's see. So this would be our push and rush on liquidity. Push back up above settlement. We took pre-market high and then came back down. That 4-hour low was still messing with me at this point because London went up and down and came and took this again and then again. It was crazy. But right here is our fair value gap. If we're just doing pure reversal pattern, that's it today. That's our fair value gap right there. And so the market pushes up, leaves this liquidity, comes back down and makes a higher low. And then we pull away with a fair value gap right there. So your order would go one tick above the low of this candle. It'd be just right there, right at the top of that blue box. And then your stop would go right here. So let's see how big your stop would have to be. You can do all this while it's happening in real time. Just measure it out. That is 43 points to those lows. Bigger than I like, but doable. So on one micro, that's $87. And as choppy and volatile as it is, one micro would have been plenty. If you did 2 micros, you're looking at a $200 stop loss. And 2 micros are a whole lot better if you're right. If you're not right, you lost $200. But look at this candle right here. That's 110 points. All the way down to there, 123 points on that 2-minute runs. But that's a 1-minute candle. That's 110 points. And this was even longer than that. So it was quite volatile. So let's say we get in there, we put our stop below these lows, and then, in my opinion, you just have to walk away and come back at 3 o'clock and see what happens. Because all of this, I was in on a trade here somewhere. I can't even remember exactly where I entered, but this right here, it ruined me. I was like, that's it. I'm done with the equities. I may never trade equities again. Because I was up like $200, $300, $400, and I moved my stop to break even, and it came down and got it. The son of a gun came and got it. Oh my goodness, I was mad. But if you look at that fair value gap, look where it touched. Perfectly, right on it. So, and then we aim for those highs, you get it. And that's a lot of points. If you got in here, 723, and you aimed, so that right at the top of that box, that's our entry. I should have just done it. $225. That's $550 on one micro. $550 on one micro. $1,100 on 2. Not too shabby. And you would have risked that $200 down there at the bottom and had to endure this. I would have had to just leave. I mean, there's no way I could have endured that pullback. Not after watching how London did and how Asia did. I would have thought that was sweeping to the lows because that's what it did over there. But yeah. Okay, so that was frustration number 1. I was seeing all these 100-point candles, and I was real nervous about trading Nasdaq. I went and tried to trade a little Bitcoin. And then I started looking at MES. Pretty much this right here got stopped out at break even. I'm mad. I'm like, that's it. I'm done. And so I started formulating another plan. When we take this, what's going to happen? I bet you we pull back to settlement. Nasdaq was still being a choppy mess. So I went to MES. Here comes frustration number 2. You remember that 15-minute where it missed me by a tick yesterday, or just by a couple of points, and then fell out of bed and I missed the whole move? Well, guess what happened over here? Same kind of setup. Went and took pre-market low. Fair value gap respected. We got the fill there. Real nice. But if you had your take profit just above that high from yesterday, you would not have gotten filled. I'd formulated a new plan, and I had my entry to go short just above that high from yesterday and that range from yesterday. and I did not get filled. And my hypo was that it would go back to settlement. And guess what happened? It went back to settlement. That's a $1,000 trade on. I was doing 4 micro ES. That is a $1,000 trade to my take profit. And I missed my fill by that freaking much. I wasn't here. I just set the limit order, put on a $200 stop loss, and it missed me by that freaking much. 2 days in a row that happened. That is a little frustrating, but you know, I knew my levels were good. I knew my levels were good. So I was confident in taking that trade. 2 days in a row, missed my fill. Down here, got scared off of it. This one, it would have been easier to trade this one. I don't know, maybe not, because that's a rip. That's a rip right there. Man, that's a rip. But there's our fair value gap on ES. Took out pre-market low. When we went up here, we left the pre-market low, so that was still there as a target. So I really should have been looking for a long here to get to there. But once again, very, very volatile. When it took this, clearly we've hit a level that the market says, okay, we're good. We've gone up, pulls back, pull that candle, boom, pulls back again. So that would have been your entry if you had the balls to do it. I did not. Over here, I did want an NQ, but I already told you that story. So yeah, there, second day in a row, missed. Once we got there, we did the Valentine heart. See that? I really believe this is all controlled by a computer. And they told that computer to make a Valentine Day heart symbol at the top of this market today. Doesn't that look like a heart for Valentine's Day? Oh man. Yeah. All you have to do is just connect it right there. Let's do it. We'll do it in red. We'll do it from here down to there. And from here back up to, let's say, right there. A little bit higher. Right there. There it is. Our Valentine Day heart right there. That's crazy. Why else would it make that perfect pattern? They did it on purpose. All right. So yeah, today was not a big money maker for me. I did manage to squeeze out a little bit of profit at 200 or 300. I don't know. 200 or 300 is my goal. I did not quit. I think I made that much, but I got stopped out at break even, or maybe $25-30. But I did that more than one time, so my profit was nothing to brag about for sure. On a day with this much movement, it should have been a whole lot more, but maybe I was a little bit too demanding on my moves, and I was also a little bit scared today and moving my stop to break even before I should have. If I would have gotten in here and I would have put my stop below that low and left it, I would have been fine. I would have made some money on the NQ when I was there. But I would have had to have walked away. This right here was just too much. I'm going to show you the extended real quick, and we'll look just over here at how London did, okay? Very similar. This is like 140. This is before London. This is just after the midnight open. So here's Asia doing all this business. Is this? Yeah, that's our settlement. Doing all this business. Then we rip down. We go to almost fill that gap. We come all the way down here. And then we go back up. Look like we're going back up here. And we rip down again. And almost took that. And then once we get in New York, we came all the way down here again. But all of that up and down movement had me a little scared because New York will usually do the same thing that London and Asia did. So all of these rips back down were scaring me. And I thought anytime it ripped down over here, that we were going all the way back down here. I was expecting a complete range day. which it ultimately was with that pullback. But, we came back to the middle of the range, finished right at settlement, pretty close to it. They would consider that a range day. It was volatile, but it was tradable if you had the balls to trade it. All right, that's it for me, guys. I hope everyone